Music Production.
Yo, what is poppin'? My voice feels fucked because I was out drinking last night. I don't drink too much, but when I do, the next day my voice just feels weird. But anyways, there's no chart on the screen, dude. What are you doing? Okay, so I'm gonna make this video here because I feel like I've honestly, like, whenever I bring this up, right, we're gonna talk about financial advisors. Um, Whenever I bring this up, it's funny because like I have a bad rap on them, but that this is from my experience. So like the one financial advisor that I've gone to has pretty much been my signal to do the opposite of what he says. So like a lot of the times when I try to learn from these guys, I don't really learn much and I do better off like learning things myself. So, and I'm speaking from a perspective where like I consider myself like a trader, like a swing trader, right? Positional trader, an investor at that too. So, for the average person, a financial advisor is actually great, but for a trader, they really might not be that useful. So I've made a video about this in the past, and honestly, like now that I think back to it, it was probably a really shit video because I pretty much was just bashing financial advisors. But here's the thing, like they're actually good if you're like way too busy to do trading, and what you want to do is basically invest on the side and shit like that. Like they're probably really good. But for traders, right? If you're like new in the space and you're trying to learn how to trade, a financial advisor might not be the best for you. But right here, I wrote down some questions to go and find out for yourself, is what I'm trying to say, right? Go to a financial advisor and try to pick their brain about individual stocks and investments. I bet you any money very few at that will be able to answer some of the questions I've wrote here with like an actual good response, right? So the reason why I'm making this video is because in the past I've spoken about, oh, financial advisors, this, that. But honestly, you should go find out for yourself, because maybe it might be opposite for you, where you actually might have like a really good financial advisor who knows this shit, where me, the first time I like went to one, he was pretty much trash, and he was just like telling me not to do all this shit, which is like wild to me. So I wrote a few questions down. So these are questions to ask your financial advisor, right? First thing you should probably ask him is, do you invest in the markets yourself, right? And a lot of the times, I bet you they'll tell you like, yeah, I have like a mutual fund or an ETF and stuff, which is actually good too, right? Depending how you use that as your like strategy to invest, it actually is like really good. So that's probably the first thing you want to know about them, right? I want to mark that off so I don't re-ask that again. But like, do you invest in the market, right? After that, like there's a few different things, right? What do you know about individual stock picking, right? Is it something that you do? Why do you not do it if you don't, right? That's another thing I'd ask, right? And then coming along with that, they're going to talk to you about risk. They're going to say shit like, oh, well, maybe they'll say something like this, like, I don't invest in individual stocks because of the risk, right? And usually the way banks work and financial advisors, the way they, um, like, they give you, what's the word I'm looking for, the way they describe risk is literally like low, medium, or high. So like if you have a high risk, they'll put you into like tech mutual funds, which is pretty much just like the Nasdaq. Like you could do that yourself, but anyways, that's usually what they'll do: low, medium, or high risk. That's how they describe your risk tolerance. But like, ask them deeper questions. How can you define what risk is for me, right? Like, in your opinion, why are the markets risky, right? Like, what makes the stock market not safe? And then you want to look for answers that are built behind, you know, the proper way to manage risk, right? Because like in my opinion, this is how I think of it. Say you have $10,000, and again, this could be scalable in any sort of way, but say you have $10,000, right? Of course, it's a little bit risky if you're just going and throwing that 10 grand into some random penny stock that you're hoping is gonna 10x, right? Like, of course, that's risky. But is it risky to do your due diligence, find out good stocks, find something that has backing to it that is in a large uptrend and will give you the opportunity to get, if it might not be 10x, but at least 30, 40% in the future? And then you're only investing maybe 1 to 3,000 out of that 10,000. Is that risky? But here's the thing though, like a lot of the times, like that's just how I think of it, but a lot of the times these financial advisors, they don't really go into detail about that stuff, right? So again, usually financial advisors aren't traders. So they don't know specific ways to manage their risk. Like, oh, I'm buying at this price level because there's been a 40% pullback. It's at a major support now. And the risk to reward opportunity is way greater than when it was at a price that was a little bit higher, right? They won't be able to describe that type of risk management to you, which is why it's kind of like, damn, like, are financial advisors that useful if you're a trader? Not really, right? So another thing I'd ask them is like, what is your investment strategy? So a lot of the times, right, it might be as simple as, oh, what I do is I have a NASDAQ ETF or mutual fund that follows these tech stocks, and then I dollar cost average on a weekly, bi-weekly, or monthly basis. Like that's their strategy. So is that bad? No, that's actually a beast strategy, especially if you could stick to that over long periods of time. But again, that isn't really a trader's strategy, right? Whereas like for me, my strategies are basically buying pullbacks on uptrending stocks that are forming some sort of chart pattern that I recognize and that I have data that shows me like, oh, okay, this is gonna break to the upside. It's more likely to do that because I have seen this pattern X amount of times on X different charts, right? So like it's different. You're gonna get way different questions if you're more so into trading than if you are just like an average person just trying to invest some money and make some capital that way, right? But I wanted to make this video just because it's like, in the past I've kind of bashed financial advisors, but at the same time, like they're actually good, especially if you're not into trading. So like, but if you are into trading, bun that. Don't you don't really need a financial advisor. Like you're probably better off going on Twitter and DMing people who are active in the space, like straight up. Ask them questions, follow YouTubers who post about this stuff often, and you'll probably get a way better understanding of, why the market is risky, how to play it safe, making smart investments. You'll learn way better that way. So yeah, this is just a video I wanted to make because I feel like there's a lot of newer entrants into the market, man. And right now, with all this chop, like you definitely want to learn the right way instead of listening to some Joe Blow who's getting paid to shill you shitty mutual funds with shitty fees. You know what I'm trying to say. But yeah, that's the video today. Peace.